Good morning, everybody. Welcome to today's Morning Blast with myself, right? And of course, Michael, as you should know by now, but if you're fairly new, maybe you don't. We have a pretty much just a rambling talk about markets, what's been going on yesterday in markets usually, and usually a look back at what happened the previous day. Also, I look forward to what's occurring in the day ahead and sometimes the week ahead, and also just bitching about markets and why we hate people that kind of make up that they know what they're doing, a bit like us, etc., etc. Just a warning, as usual, this is recorded live, no editing. So if you are listening to this on the podcast players, etc., rather than listening to it live, don't feel like you've any kind of slicker version. It very much is. It comes, but take us as you find us. Obviously, nothing we discuss on this podcast is trading or investment advice. Nothing we say is endorsement. If it was, we'd be absolutely clear. The only two things we endorse are each other. How about that one, Michael? How are you?
Well, very good morning to you, Ryan. Good morning, everyone. Sorry, I've just been slightly sick in my mouth at that rather corny comment you made there. I'm not too bad, mate. Not too bad. Pleased to see that everyone seems to have calmed down about the whole geopolitical situation, going slightly less Caracas about it than yesterday.
He's shit.
Oh, sorry.
I was going to comment on what a blisteringly cold morning it is here in the UK, but then I feel like we'd be rubbing the nose of our dear friend Tom into it because obviously his boiler broke down last night. Anyway, enough about Tom.
Having said that, it is bloody cold. It's so cold I've actually had to put a jumper on, which is very bad for me.
So no G-lay for Michael Brown today?
No, we need sleeves today.
There we go. Well, obviously, there's no update from our good friend Clive Lambert on market movements and levels because he's still in Australia. So we've got to wait for him to get back on the 12th. Before we crack on, obviously, the new kind of format where rather than you just talk a load of headlines and I talk a load of headlines, then we both talk a load of headlines. We're kind of doing it. You give a little rundown of what happened yesterday in markets. We then have a couple of topics that we ramble about, and then you do what we got to look forward to. So what happened yesterday, my friend?
Indeed, yes. Well, actually, we may as well start with geopolitical events because markets pretty much shrugged those off with ease. The S&P 500 rallying strongly, closing higher by about 0.6%. We also saw new record highs in Europe as well. The FTSE closing north of 10k, and very pleasingly, the pan-European Stocks 600 closing north of 600, which has a nice degree of synchronicity about it.
All right. That was, so just for those that aren't aware and don't follow Michael on Twitter, that's obviously his new favourite word because I saw him tweeting.
That's the last time you'll hear me say.
And I didn't have to Google it, honestly.
Well, we'll leave that one up to the audience. Probably the only notable impact actually of all of the shenanigans that we see in Venezuela was in the energy space in terms of energy stocks, not necessarily in terms of commodity prices. The S&P 500 energy index had its biggest one-day gain since July. We saw Chevron trade about 6-7% higher. Of course, they are already operating in Venezuela, and the expectation being that they will potentially be the first to capitalize on any promising developments that we see on that front. But overall, I think that it was a relatively tepid start to the year. Continued strength coming through in the precious metals complex. Gold up by about 3% yesterday. Silver continuing to gain ground as well. And this morning we see silver trading around $79 an ounce. But I think probably the biggest takeaway for me from yesterday, whether you look at things from a market perspective or whether you look at things from a news perspective, is that there wasn't really any further escalation in terms of the developments that we see in Venezuela. Delcy Rodriguez was sworn in as the acting president. Prior president, ex-president, whatever you want to call him, president in exile, Nicolas Maduro, pled not guilty to those narco-terrorism charges in a New York court. But I think actually probably the biggest thing for me yesterday, the biggest takeaway from yesterday, was arguably the lack of fresh developments that we had on the geopolitical front, which I think has allowed markets to move past things and actually given investors a degree of reassurance that this is a sort of surgical operation to extract one chap and his wife, and not the US wanting to invade the country and take over.
Well, just on this as well, because obviously Venezuela, it's going to be our talking point probably for at least a little bit of each podcast for God knows how long, the next week or so. Obviously, I put out couple of articles yesterday, one of them in particular about the opposition. A lot of people were kind of flagging regime change, and we were very quick yesterday to kind of remind people that this isn't regime change, because at the moment the regime is still in power. It's just the head is being swapped over. And it seems to be that's what we're going for, because obviously Rodriguez, who has been Maduro's number 2 for quite some time, and, you know, like Maduro is kind of Chavista royalty, or Chavista, not Chavista, walking around in a, well, I don't know.
Burberry trench coat or whatever.
You did see what he was wearing when he got caught, so he did look.
Well, yeah, true.
Obviously, a lot of people saying that I can't remember what her name is already. I'm gone blank. Mercado, the one that won the Nobel laureate. I do feel sorry for her, because when she won the Nobel Peace Prize, I don't know if you're aware of this, when she won the Nobel Peace Prize recently, obviously got smuggled out of Venezuela and all this stuff, she, in her speech, she caused a bit of uproar with people that should know better, really, by praising Trump. She basically was singing about how great Trump is in a speech when she picked up a Nobel Prize, obviously expecting that if Trump did anything, he would put her in power. And he's turned around and said, actually, we don't think you've got any support. We're going to stick with the lot that are in charge. So I do feel sorry for her in a way, because she's been completely ironed out by Trump. But it's definitely one, you know, we've got to keep an eye on it. Obviously, last night, for those that aren't aware, there was some significant gunfire and stuff heard in Miraflores presidential palace, or in and around the presidential palace, at about 8 p.m. local time. And this included anti-aircraft fire, and it was all over social media. There's a lot of people screaming coup, not as in doing Dove impressions, but as in saying they might be a military coup. Coup. Obviously, you know, these things could happen. It is Latin America. A coup isn't the most unlikely thing to happen. But apparently, again, we've actually mentioned this in, I can't remember what one of the articles it was. It was either on the current party's primer or the opposition primer that I did, but check them both out. There's basically paramilitary groups called like collectivos that basically run on behalf of the people in power. And they're basically like biker gangs almost. That's pretty much as easy to think about it. But they've been given a lot of guns, and they're basically going around enforcing. And it seems like that someone got a bit confused, and there were some drones up in the air, and people thought, oh my God, the Americans are back, and it's all kicked off. And then someone's literally gone, well, if they're firing, we better fire. And then the next people over are gone, well, if they're shooting up in the air, we better shoot up in the air.
Yeah, it all just spiraled a bit.
And then it's all spiraled out of control, and everyone's like, well, hang on, what are we shooting at? It's like, well, I thought Dave was shooting at it. And I was like, oh no, I thought Pedro was shooting at it. So it all got a bit carried away. Well, I'm covered up with Latin American names, you know me, I'm man of the people. But no, I think it is very interesting. Like you said, yeah, the market reaction, you know, it's been completely unmoved by, you know, when I say unmoved, it's been completely opposite to what many of the talking heads were calling about. Obviously, oil in the scheme of things barely moved. Gas, as we said, got knocked off its perch, but that was from the weather. And again, I think it just comes to, you know, it just as another example of people getting too giddy and high on their own supply. Markets open and many people get made out for what they are, which is complete mugs. But unfortunately, the nature of the beast is it won't change them, and it won't change the fact that some of their followers revere these people in cult-like conditions.
No, of course it won't. And I thought you said something other than cult then for a second. But I think just to sort of round out on this one for the time being, it is something obviously we need to keep an eye on, because there could potentially be an escalation. We don't know. The situation is clearly still very, very volatile, and there are more unknowns than knowns. But the way I would sort of frame this at the moment, and have been with clients over the last day or so, is I think for the time being, this is more of a news story than it is a market story. And what I mean by that is it's something that clearly the media will be very, very interested in. If you put Bloomberg or CNBC on, it's all they're talking about. But is there actually a trade that you can put on the back of this? I would argue right now, no, there isn't. And it probably doesn't change the outlook for anything in DM over the short term or the medium term. The one group of people I do feel a little bit sorry for this morning are the EM strategy desk at Barclays, because on Friday night, they put out a note saying we turn underweight on Venezuelan government bonds, blah, 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 blah. 14 hours later, they published another note which said, we've been overtaken by events. We go back to market weight with not
There we
cool.
go.
So that serves them right for putting out a note on Friday.
Well, I tell you what, as well, the bro on Venezuelan bonds ain't going to be cheap. So if they did actually if they did some business on that, some brokers cleaned up. So I bet the spreads aren't exactly tight either.
Well, no, I can't imagine they are. But good luck getting around the sanctions that are on them as well.
Bit of top and tail in there. I think you made a very good point. Obviously, when we say there's no real trade, what we're talking about kind of bigger trades, as in is it long for equities? Is it long for oil?
Oh, I mean, you can nick 20 pips out of cable, but you could do that any day of the week.
Yeah, but I mean, if you were, obviously if you were in sort of refineries and kind of that, you would have done very well. So obviously there are kind of, when we, I'm just trying to kind of taper people's expectations. I don't want anyone going away. So, they said there's no trade there. Obviously you could have done this, you could have made money. Of course you can. But what we're thinking is the more kind of broader things that most markets that people can access and that kind of thing.
Yeah, absolutely.
One thing, but I think you're exactly right. I think there is a difference between news story and market story. But the problem is when it's something like Venezuela that have a absolute ton of oil and precious metals and whatnot, it's very easy to think, this must have direct impacts on energy markets. And we see this, do you know what? We see the same, and it kind of reminds me slightly of when anything kicks off in Iran. Anything kicks off in Iran, people go, oil should be $100. It should, and it's very similar kind of thing. But obviously this has almost gone the other way. I think it was, what's the guy called? Grant Cardone or whatever his name is.
Oh, yes, yeah.
He was calling for sub $50 oil Sunday night. So that's where it should open. I mean, do me a favour.
They're a very easy way to see that you've never looked at a crude chart before.
Well, or understand anything about crude markets, exactly.
Well, yeah.
So we've covered Venezuela, and obviously just thinking about a couple of other talking points. Oh, sorry, was there anything else from yesterday you wanted to bring up?
No, I think that's probably it, to be honest.
Okay.
I mean, the only other thing it was a relatively light day in terms of news flow, to be honest with you. The only other
relatively.
Well, yeah, apart from all the Venezuela stuff. The only other couple of things I will pull out is, and obviously we do have the overnight news roundup going out still, so do go and have a read of that. We did have the ISM manufacturing survey out of the States, which came in of 47.9, which is the 10th consecutive month below that 50 mark, which is the break even between expansion and contraction. But having said that, manufacturing only represents about 10% of US GDP. So yes, it's important, but it's not the services sector in the grand scheme of things. It doesn't matter too much. And the other thing that I did just want to mention very briefly, and this is a little bit of a geeky one for UK focused folk, we had news from the Treasury yesterday. They have launched a consultation in terms of improving the short-term Treasury bill market here in the UK. Now, for those who are unaware, the UK does not really issue much, if any, in terms of T-bills, stuff of less than 1 year in terms of maturity. The DMO currently issues around £11 billion worth of Treasury bills. That's about 3% of the overall financing need. And of course, you compare that to the United States, where they're issuing, 70, 80 billion in T-bills 2 or 3 times a week. The reason why this consultation is interesting is twofold. Firstly, it's because the buyers of gilts, the composition of those buyers is changing, primarily as a result of moving away from defined benefit pension schemes and away from certain life insurance policies. Pension funds don't need to buy as many longer dated gilts anymore, which means there's much more in supply. And of course, that pushes the yield higher. The second reason why this is important is because in the short term, if the UK were to skew much more of our funding requirements towards the ultra front ends of the curve, that would obviously result in us paying a lower interest rate because, the front end's trading at 3, the long end's trading at 5. However, the sort of sting in the tail of that is it would mean over the longer run, the UK would potentially be more susceptible than it is at the moment to changes in interest rates, because of course, as the Bank of England moves things around, the front end of the curve is going to be more volatile than the long end of the curve. So something to keep an eye on there. That consultation is due to wrap up at the end of February. It's not a market moving story again, but I think it's just something to bear in mind, just keep on the radar a little bit, because of course the UK remains in a very, very fragile fiscal situation. And although that was dominating the narrative last year and it's gone a little bit quiet as the new year gets underway, certainly the situation hasn't changed too much.
This is one of those things that I file under. I'm glad Michael Brown knows about it, so I can just rely on him to tell me when I have to worry about it.
Right. Well, there we go. No pressure on me.
Yeah, well, exactly that, because sometimes I'm like, I hope there's not a quiz at the end of this. Right. Anyway, so just something next thing I wanted to talk about with you. I believe this is one of your favourite subjects. just quickly, a nice little 10-minute section on this because obviously Dow was in the news yesterday.
No,
It was an all-time high. Dow 49,000 makes a far better headline than S&P up 0.6%, which jokes aside is very true, right? Tell me, right? We know it's garbage. I'll give a bit of background for people that are saying, well, why are they saying the Dow is garbage? It's because it's price weighted rather than market cap weighted. To give a bit of a background about the fundamental flaw is obviously the Dow weighs stocks by share price, not company size. So a $500 stock has 5 times the influence of a $100 stock, regardless of the market cap, right? Which immediately you're thinking, hang on, that can't be the case. So Goldman Sachs, for instance, which is 167-ish billion market cap, is the largest Dow component, nearly 11%. Apple, which is a $3 trillion market cap, isn't even in the top 10 constituents of the Dow. And Nvidia is even lower than that because the actual share price, because they've issued so many shares worth 3 trillion, is really far down on the Dow.
Even though they're the biggest company in the world.
Even that. And then, but not only that, but then Apple, who, again, they should be a lot higher than what they were. But when they did a 4-for-1 stock split, as a $2 trillion company, the value of the company has not changed. They've just made the shares more accessible, right? Because this is how mad it is. Because the Dow is based on the price, the Dow was influenced instantly by this and instantly slashed. Well, the influence of Apple instantly.
Excuse me.
Even though the value of the company didn't change. Talk me through why people still use the Dow.
Well, I'll give you 4 reasons why they shouldn't use the Dow, but I think you hit the nail on the head earlier on when you referred to, basically it sounds better than the S&P, and that's exactly what it is. It's a headline grabbing, basically it's a big number. So the 4 reasons why I think the Dow is utterly pointless, and I hope 2026 is a year that we retire it. Firstly, going back to what you said, Ryan, it's not actually an index. If you think about it, it's simply an average of the prices of the stock, of the 30 stocks that are in there. And to your point a moment ago in terms of index weightings, yesterday, Goldman Sachs and Caterpillar, 2 stocks, which they're not the biggest companies in the world. They are large companies, of course. They were responsible for 60% of the gain that we saw in the Dow. Just those 2 companies. The other 28 could have gone absolutely nowhere. And the index is still up 300 odd points. The second thing to bring me onto that is that measuring something in points is completely and utterly pointless. Because a jump from 5,000 points to 10,000 points, 5,000 points in percentage terms is a much larger jump than a move from, say, 45,000 points to 50,000 points, which effectively means that every 1,000 points that the Dow jumps, the percentage move is, a 10 basis points smaller than it was previously. And that will become exponentially smaller as time goes on and you assume stocks continue to rally. The third reason why I think the Dow is utterly pointless is because there is no money that tracks it. If you look at ETFs for the S&P 500, the most popular S&P 500 ETF is about $550 billion worth of capital tracking that ETF. If you look at the most popular ETF that tracks the Dow, there is about $30 billion.
I'm glad you said that, right? So I've got a benchmark data here, and I believe this is correct, right? Again, the data's a bit old, I apologise. But so the latest I could find briefly when I was scrambling this morning, as of 2020, so again, there's 5 years, we've got to make up here, but there was just assume that the ratio hasn't changed, it's probably got worse. There was $13.5 trillion was benchmarked against the S&P 500, right? There was only 37 billion benchmarks for the Dow, so that's 0.3% of the size.
Which, that says it all, really, doesn't it? No serious investor is actually using this as a benchmark or using it as an investable vehicle. And last, but by absolutely no means least, and potentially the reason for that is because the Dow, with the 30 stocks that go into the Dow, it's completely arbitrary as to who is included, who isn't included, and when they are included and when they are taken out of that index. There is no sort of fixed criteria. There is no, criteria around, for example, the NASDAQ will not have financial services companies in it. There's no sort of market cap limits, price limits, anything like that. It is simply a committee that sits in a room at S&P Global Indices and goes, who do we want to put in the Dow this quarter? And that, again, really detracts from any any value that the index could potentially provide, because it's not a representative sample of the US economy or the US stock market. It's simply 30 companies that a group of people have sat in a room and gone, yeah, they'll do for the next 3 months.
Well, quite, because I was going to ask you, is there any scenario that you can think of, because I'll be honest, there's none that I can, where the Dow tells us something useful that the S&P doesn't or the Nasdaq doesn't? I can't think of any scenario where I'd prefer to look at the Dow.
No, never. If you want to, I mean, actually, yeah. If you want to look at the performance of tech names, you look at the Nasdaq relative to the S&P. If you want to look at small caps, you look at the performance of Russell but relative to the S&P. And actually, nowadays there are so many ETFs tracking not only the sectors but also the subsectors and the industries that you can use those relative to the S&P. There's no point in a Dow. Literally no point.
Traditionally you might say, well, you look at the Dow because it's more the traditional names, especially for, because Caterpillar was in.
Well, not if it's got Apple and Nvidia.
Well, no, exactly. But like now, if you wanted to kind of, gauge on kind of infrastructure or whatever, like older names, then you would look at the, because of how liquid some of these sectorial ETFs are, you would look at an infrastructure ETF. And they're liquid. They probably got more in them than the Dow anyway, in terms of liquidity and whatnot. But again, I keep coming back to the fact that it's basically just there because journalists and talking heads and presidents like quoting Dows because it's big numbers. It's absolutely bonkers that it still exists in the world like today. And I get the feeling that a lot of people, when they come to markets or come to trading for the first time or investing, no offense to the boomers out there, but you've been brought up on the Dow, so maybe that's another reason. But if it wasn't for the talking heads and the journalists, no one coming into markets these days would ever even look at the Dow.
No, you're absolutely right. And actually, just lastly on this, before we sort of move on probably to the day ahead, there are instances, actually on the flip side of the question you just asked, would you use the Dow for anything you wouldn't use the S&P? No. There are instances where actually the Dow tells you, completely the wrong story. Let's say, for example, Goldman Sachs report earnings next week. They've got an 11% weighting in the Dow. I haven't checked, but I would imagine their weighting in the S&P is about 0.5%. Yeah. If Goldman miss on their earnings numbers next week, the share price is down 4, 5, 6, 7%, whatever it might be. The Dow is going to be off 400 points, simply on the back of that move in Goldman. Man, does not mean that everyone is suddenly max bearish and limit short US equities. It simply means that because of the terrible way that it's calculated, one stock is skewing the whole thing lower. Yeah. So if you're sat there and you go, oh, the Dow's down 400 points today, the market must have had a stinker. Well, no, I would say 9 times out of 10, that's probably not the case.
No, absolutely. Again, I think we need to kind of that could be my task. I think I can't remember I had many kind of bees in my bonnet last year, but maybe my bee in my bonnet for 2026, which will please you, is, this outlaw the Dow from any social media conversation. But anyway.
That's something I can get behind.
Yeah, exactly that. Right, Michael, what's occurring today? What have we got to
Yeah, well, not a lot, in short, to be completely honest with you. I mean, obviously, participants will continue to focus on geopolitical events, chiefly those in Venezuela, and if anything happens there. But besides that, the data docket is relatively light. At 9 o'clock at the top of the hour, we get the final December services PMI out of the Eurozone, which is expected unrevised at 52.6. We also get the regional German inflation data at the top of the hour as well. Moving on from that, at 9:30 London time, we get the services PMI out of the UK. Again, the final reading for December. That is also expected unrevised at 52.1. Although do just bear in mind, actually, on those PMIs, for the manufacturing numbers that we had at the back end of last week, we did see for both the Eurozone and the UK quite a chunky downward revision compared to the flash estimates. So potentially a little bit of risk associated with the services numbers that we'll be getting today. And then at 1 o'clock this afternoon, we get the nationwide German inflation data. CPI seen falling to 2.1% on a year-on-year basis in December, down from the prior 2.3%. That, of course, comes ahead of the Eurozone-wide inflation data that we'll be getting tomorrow. And, of course, we have already had the French inflation figures this morning, which showed CPI falling to a 7-month low. Just a note on this is that a lot of the decline in inflation that we're seeing in the Eurozone in December and that we'll continue to see through the first quarter is being driven by a base effect coming from energy prices. Right. So the ECB are very, very much likely, if not certain, to actually look through that and not change their policy outlook based on the data that we're getting. Speaking of the ECB, we're due to hear from the ECB's Vilroy and Cipollone as we move through the morning. And then 2027 Fed voter Thomas Barkin will be making remarks this afternoon. And that is it for the day ahead.
Wonderful. Well, just something I wanted to point a raise before we do sign off. Again, I'm hoping people like the new format where we actually just have a chat about random things and a bit of a rant. I much prefer it, to be honest, rather than just kind of head reading off a load of lists. But I wanted to raise Tesla, which, last night, in the early hours, I can't remember why I woke up. I was probably, because I'm getting older, I probably woke up to go for a wee, to be honest. I have a bit too much information there for you, but there you go. Tesla's UK registration details came out yesterday, right? Or late last night. A 29% drop year on year in December as the competition is heating up. Now, Tesla in December only registered in the UK 6,323 cars. That was a drop of 29%, right? BYD, the Chinese rival, they increased fivefold to 5,194 units. Now, we all know the cult of Tesla, so bad news for Tesla gets very little traction on social media, let's be honest. But I do wonder what happens when we start seeing headlines, not just in the UK, but I think this is a trend we're seeing. I'm not going to say globally, but potentially globally, but definitely European wide, that we start seeing more and more countries where BYD is overtaking Tesla. And what happens then to the fawning over Tesla, if you see my point? Do we start seeing the edge or the cult-like status start to diminish, or are these cults, so I said cults with an L, are they so ingrained that it doesn't matter and they'll come up with reasons and start telling us about the robots and all that stuff that's coming to market in the next 2 weeks?
Well, I think we both know the answer to that. Yes, of course they will. The one sort of caveat I would make with that is I still maintain my view that Tesla is almost, the way the market prices and trades Tesla is more than an automaker.
Oh, yeah.
It's effectively a liquid vehicle by which you can get exposure to Elon Musk's brain, whether that be SpaceX, Neuralink, whatever. It's that exposure to Musk, which is why Tesla's probably trading at a premium compared to where you say it should trade if it was a Toyota or something like that.
Good question for you.
So when SpaceX IPOs...
Yes, this is what I was going to ask you. Go on.
Well, is the obvious pairs trade short Tesla, long SpaceX?
That's exactly what I was going to ask. I'd be honest, if that happened...
I don't like obvious trades because it makes me a bit nervous, but it does feel like that could be one to look at.
Yes, I'm with you. The only thing that makes me think that, I've spoke to someone recently about this, and I said Tesla is basically a hopes and dreams company. Because basically that's what it is. It's like Elon just saying random things that he would like to build or something that's coming to market in, whenever, puts no time frame on it, or even when he does, he's not being held to account. You're basically invested in Elon's hopes and dreams. But what happens when the Texas exchange opens up and we've got SpaceX IPOing over there and potentially Neuralink doing the same separately? I don't know. But it's one to keep an eye on, because it's definitely, the way it's priced up, it definitely isn't a car company, and people, need to start recognizing that. And at the moment, let's be honest, they're not bringing anything else to market.
No, not at all.
But one to keep an eye on. But anyway, Michael, thank you so much. Shout out to our good friend Tom, who helps us out running these in the background. Hopefully he gets his boiler fixed, because it is bitterly cold today. Whatever you're up to today, boys and girls, keep it tight. Stay